Welcome all to Stock Markets with Bruce live stock market coverage in plain English. There was an article that came out this morning that I found interesting. It's on the Motley Fool site, and its headline is two top turnaround stocks to buy now. These two battered stocks have reignited investors' passion over the past year. Can their momentum last? We're talking about the two companies. GameStop is the first one, and the second one is Bausch Health Companies is the second one. And the first thing that the author did, and the name of the author is Xuan Sun, mentioned that video game retailer GameStop and biopharma Bausch Health Companies are two companies that have realigned themselves on the path to growth after staying away for too long. Shares of two companies are up 2,790% and 82% respectively over the last 12 months. What's more, both companies have attracted substantial institutional interest. Ryan Cohen, the former co-founder of Chewy, is looking to personally steer GameStop's turnaround after acquiring a 13% stake in the company. Meanwhile, billionaire hedge fund manager Carl Icahn recently purchased 7.8% of Bausch Health shares outstanding. Here's how the two businesses could preserve going forward. Okay, now I'm just going to concentrate on GameStop right here. GameStop, it says, it was obvious from the beginning what the iconic video game retailer needed for a comeback: close unprofitable stores, invest in e-commerce, and overhaul its outdated customer services. The problem was that nobody believed in its potential. Leaders throughout the company, lenders thought the company was on the brink of extinction and stayed well away from it. Due to intense short-selling activities, its share price also remained low enough to make equity financing impossible. That all changed after a legendary short squeeze sent its stock soaring. Thanks to the boost from retail traders, GameStop raised $551 million in much-needed cash by selling just 3.5 million shares, about 4% of the company. A year ago, it would have only fetched $13.2 million by selling the same amount of shares. So from 13.2 million to 551 million, thank you for the stock move. Now, that's just me adding a little comment there. With the cash boost, it was able to eliminate its long-term debt. Now GameStop is capitalized for growth. Last year, the company's e-commerce segment improved by a stunning 191% year over year. Online sales of its consoles, accessories, toys, video games, and collectibles now account for over 30% of its total $5.09 billion in revenue. Now, I'm going to add a point here. That $5.09 billion in revenue is officially last year's annual report sales for the 4 quarters. That, of course, includes the entire year of a pandemic. The year before, the sales were $6 billion. The year before that, they were $8. We now know that the last quarter of the last year, they had over 2.1 billion in sales roughly, and we're told and we're indicating and we're getting the impression that the first quarter of this year is close to 2 billion as well. And so in effect, in the last 6 months, the company is pushing over 4 billion in sales, or around 4 billion in revenue, compared to 5 billion for the whole year last year. So if in the last 6 months they're now pushing 4, the next 6 months, if they push another 3 or 4, guess what? 7-8 billion in gross sales, higher than last year, higher than the year before that, and there will be a lot of reevaluations going on. All right, Matt, back to this comment. The last sentence on this article, and this one caught my eye big time. The best part about GameStop is its valuation. Despite an impressive run-up, the stock is trading for only 2.26 times its revenue. Retail stocks typically trade between 0.8 and 4.5 times sales, depending on their e-commerce exposure. So there's definitely room to make money if it completes its digital transformation. All right. So taking that article and taking that comment, here's what I've come up with in my, here's where my brain is going. Plain English, okay? We're back to plain English. Hang in there with me. So I was thinking, all right. So the company's trading at 2.2 times sales based on last year's full year of about $5 billion. The market cap of the company is $11.4 billion. That's the 2.2. 2.26 times sales equals 11.4 billion in market cap. That's what we're seeing here. And there's $162 a share. I'm thinking, okay, well, what if this year they hit 8 billion in sales and it's just 2.2 times earnings, 2.2 times sales is the same factor to be used, but it's an $8 billion number. Now what do we got? Well, what we have is about a 16 to about a $17 billion market cap, $17.5 billion market cap. So that would be about 6 billion more, more than half, 50% more. So that would put the stock at 240, 250, just if the sales go to 8 billion. But then I thought, yeah, but hold on a second. If they do have 8 billion in sales this coming year, we're in the first quarter now. We got 3 quarters to go. But let's say it's 8 billion for the year. And e-commerce is accounting for 30 to 35 to 40%, maybe 45% of all sales. Because remember that distribution center is being built in York, Pennsylvania. That's a 700,000 square foot fulfillment center. You know, we know they're going e-commerce. All right. So let's say they get to 40, 45% e-commerce and they reach 8 billion in total sales. The good news is, and the reality is, that they'll have beaten last year's 5 odd billion in sales. They beat the year before, which was 6 something billion, and they'll have probably matched the year before that, which was the 8 billion neighborhood. And 2 or 3 years prior to that, it was also in the $8 billion neighborhood. If this company actually pushes 8.5 to 9 billion, they actually can push it to that level with all the new merchandise they're offering now on their websites. I kind of wonder, that would be the best sales number maybe in 5 or 6 years. That could be the best gross sales number of GameStop since like 2015, when the stock used to be $40 a share, way back when it started to get shorted. Okay. The second point I'm going to make is, all right, it's trading at 2.2 times sales now. I'm wondering, well, will it trade at a higher level than that because of the growth of the numbers? Because obviously, when you have momentum on the upside, everything starts to improve. Your PE multiples get higher. Your forecasts start coming in. You start kind of buying into next year's earnings and the year after earnings, because the thinking's got to be, well, hey, they did 5 billion in sales last year during a pandemic. They're doing 8 to 9 billion in sales now coming out of a pandemic, and they're completely changed the company to e-commerce, building the fulfillment center, bringing in all these e-commerce people. Could they do 10 to 11 billion in sales 2 years from now, like next year for 2022, 23? If that's the case, the stock will not trade at 2.2 times sales. It'll trade at maybe 3.5 sales or 4% of sales, 4 times sales. And so I got me thinking, all right, well, if it's going to trade at, say, 3 times sales, and this year is, again, just this coming year, it's going to do 9 billion at 3 times sales. That's a $27 billion market cap. A $27 billion market cap is 2.5 times what we have now, because we're 11. It's at 11 right now. So that would put the stock at 2.5 times its current value, right? So 2 times is 320, and half of 60 is 160 is 80 more. That's a $400 stock. So could that put the stock at 400 a share later this year, based on the sales of this year, based on its sales growth of this year? And going forward into next year, if the company estimates that they think they can do 10 to 11 billion in sales then, and the shares, the company could trade at 3 to 4 times sales, because again, momentum is building. Would that mean maybe at 4 times sales, at 11 billion in sales, that's $44 billion market cap? That's quadruple where the stock is now. So $640 a share. So could it be a $400-something stock this year and a $650 stock next year, based on just sales and momentum? No short squeeze, no quantum squeeze, no miracle buy-in thing and hedge fund realignments. I'm just talking hardcore numbers of what are they capable of doing. Because if the street if the company says this year that they're going to do 30, say 40%, 45% of e-commerce for this year, 2021, and for 2022, they believe they're going to have e-commerce at 50 to 55 or 60%, because again, stores will close out, e-commerce will be rising, and the numbers come in at 8, 9, 10 billion in gross sales, lower expenses, of course, not as many rents to pay and all that. The street could say, oh yeah, this thing should trade at 3 times sales, or maybe 4 times sales. Again, the average is up to 4.5. I haven't even gone up to that level. If it went to 4.5 in sales, 4.5 times sales, and it was 11 billion, we were talking now about a $50 billion company, 50 billion market cap company. That would give you a $700 stock, roughly, give or take 20, 30 bucks each side of that. So, okay, all right. And then I keep coming back to Chewy. I just go back to Chewy all the time. And I go, well, Ryan Cohen founded Chewy. And it was a direct competitor to Amazon in the pet food business and pet supply business. And it's US only. It's a smaller company. They don't have 10 billion in sales. I mean, there's 7 or 8 billion now is kind of where they're headed. GameStop is going to equal that number or outgrow them. They're going to have more in sales than Chewy will. And GameStop will be rapidly doing most of that business eventually in e-commerce, and a minority of their sales in retail as they, really step it up. Chewy right now is trading at $30-something billion in value at market cap. So we have a scenario here where GameStop has a lot of catching up to do, I guess is what I'm trying to tell you. Yeah, as of last night, $33.5 billion was the market cap of Chewy. And last night, the market cap of GameStop was $11 billion, 1/3. So GameStop is at 33 cents on the dollar compared to Chewy on a market cap comparison. So the shares of GameStop should be right now $486 a share to be equal to what Chewy is worth, according to the market. The market is placing a value of Chewy equal to $486 a share on GameStop stock. And so that's where we're at there. I hope you guys are having fun with this. And I hope you enjoyed my show and my biting commentary.